In this video, I'll be discussing with you the truth behind the borrow until you die tax loophole and why the IRS doesn't want you to know this. Right now, there is a financial system running in the background of your life, a system the wealthy understand intimately and uses every single day. You were never taught it, you were never meant to see it, and most people have been actively staying away from ever seeing it. But once you see it, you cannot unsee it. And today, I'm going to be exposing the one tax loophole that allowed normal people like me and you to tap into the same wealth engine the millionaires and billionaires are using every single day, and it is completely legal. And I'm doing this because most people think that wealth is reserved for the business owners, for the top millionaires, for people who already have money or who have inherited wealth from their family. But that is completely false, because there is one accessible doorway into the wealth system the rich and millionaires use every single day, and it is the short-term rental and bonus depreciation loophole, also known as Airbnb. So here is the twist: not just go and buy Airbnb and think, oh, I can do the same thing that the riches are doing. I want you to understand the twist right here. So if you materially participate, the IRS treats your Airbnb as a business. It treats it like an active business, not a traditional rental. And because it's treated as a business, that completely changed the game for you. You can now use bonus depreciation to offset your W-2 income. Let's say you are a medical doctor making around $700,000 every single year. Buying one or two short-term rental every single year can offset about 30% from your taxable income. Let's say you buy a property of $500,000 and you use it for Airbnb, because Airbnb is treated as an active business. You can now do a cost segregation, plus you do a bonus depreciation, and you can generate about $125,000 in a paper loss. This is a paper loss, not a real loss in reality, but that is how the IRS categorize it. Now, let's say you make $100,000 in that same year. Your taxable income of $100,000 now goes to $0, and your tax bill is gone, 100% eliminated. So instead of you paying around between $18,000 to $22,000 to the IRS, you keep all that money to yourself, simply because you bought one short-term rental and you do a cost segregation on it that allow you to write off all your tax liability because you do that strategy. And because you didn't pay that money to the IRS, that's the money you can now use as your down payment for your next property. And boom, this is how normal people like me and you sneak into the wealth club. And this is how your personal zero tax snowball begins. If you are meeting me for the first time, hi, I'm Wale Lawal. I'm a real estate investor and a real estate broker based in Houston, Texas, and I am the guy who helps everyday professionals to close their first or their next rental property within 60 days without getting crushed by taxes, confusion, or bad deal. Now, let me show you the owner playbook, the system the wealthy use to build generational wealth every single day. Wealthy people don't get rich by selling assets. They get rich by keeping assets and borrowing against it. Because when you're borrowing against your asset, it is not an income. And because it is not an income, it cannot be taxed. Here is what happened in the real world. You buy a property of $400,000, tenant pay down your loan for you, the value go up to around $500,000. The average person in real world will say, oh, now I have $100,000. Let me sell it. And once you sell it, you're going to be giving 20 to 30% of that your profit to the IRS. So let's say you make $100,000. Now you're going to be paying IRS about $30,000. So in reality, you're only keeping $70,000 in your pocket. And once you sell it, boom, their wealth goes back to zero. Now you have to reset the clock again. But the wealthy people do something completely different from what an average person do. They never sell the property. Instead of selling it, they will refinance or do HELOC, home equity line of credit, on the property, because the lender will borrow them up to 75% of the current value of the home. Let's say the 75% of $500,000 is $375,000. Now the remaining loan balance is $280,000. Now they can get a tax-free cash pull out of about $95,000. And that $95,000 no taxes, no selling, no hitting any reset button. They still control the asset and they can continue to leverage it over and over again. The wealthy person will now use that $95,000 as a down payment to buy the next property, and which creates more cash flow, more depreciation, more appreciation, more equity growth, and more property to leverage on to do it over and over and over again. And this is how the wealthy people continue to build wealth every single day. So here is a wealth circle in a very simple term. Wealthy people will buy income producing assets. They grow it over time. They now borrow against that asset by doing HELOC or refinance. Then they use whatever money they free up to buy another asset. They do the same thing again and they never sell the property. This is what the wealthy people would do, and that's what they teach their kids, and that's why the wealth stay in the family for several generations. So here is where the short-term rental I discussed with you earlier can help you supercharge your wealth building journey, because normal rental don't let you offset your W2 income like the short-term rental do, right? So you buy a short-term rental, you actively manage it, and you do a bonus depreciation on that property, and the bonus depreciation you do can help you offset your taxable income from your active job. Again, $100,000 is what you make that you're supposed to be taxed on. You can now do a bonus depreciation on that property, and now your tax liability goes to zero, and that is the money you can now use for your next purchase as your down payment. This is how regular people go from just being trapped in the paycheck to paycheck to now becoming a millionaire, and they do it over and over again. So let's look at a very realistic example. Let's say right now you have one property. From that one property, you can convert it to a short-term rental and go buy another one. Now you have number 2. From number 2, you can buy number 3, number 4, and you can continue to play this game, and in about 5 years, you will be surprised how much equity you have built over time. So this is a practical example of how a W2 earner can accelerate from one property to 2 to 4 to 6, because every property creates the tax benefit that you need for you to buy the next one. And this is the true beginning of that zero tax snowball I discussed with you. Now, this is completely legal because the IRS wants you to play by their rule. They have a rule, right? And if you understand the tax rule and you try to position yourself by hiring a good CPA to help you implement this strategy, you're going to love taxes, and you're going to stop complaining about, hey, taxes is meant for the rich people. You're gonna stop saying all that. So let me put this entire system into one sentence for you. You buy a cash flowing property, then that cash flowing property grows equity over time. Then you can now unlock the equity through your refinance or your HELOC. Then you borrow that money from the HELOC to buy another asset. And from that asset, you can now do a bonus depreciation that you can now use to offset your taxable income. And the more you do this, the more you can now repeat the same cycle again. And this is how you can hear that the wealthy people don't pay taxes. Elon Musk, Bill Gates, Jeff Bezos, they don't pay any taxes. Mark Zuckerberg is paying himself $1 every year. Is because they understand this tax loophole. And this is why the wealthy people compound their wealth forever. This is why they continue to borrow until they die. And yes, when they die, their heirs get those property with a stamp-up basis, meaning that if the Q sell the property, they owe $0 in taxes on property that has appreciated for several decades. And the snowball never stops, the game never resets. Now for the first time, you now know the rules. Are you going to be playing this rule as well? Drop your comment in the comment section below. So as you can see, you were never taught this system because it wasn't designed for regular people like me and you. It was designed for the owners, the wealthy people that understand how money works. And the moment you buy your first property with just one property, you cross the line and start playing completely different game. Now that you have all the information, let me know in the comment section if you're going to be implementing this strategy, or if there's anything else you think I missed out. I read every comment and I will be in the comment section replying to you. And if you want my step-by-step breakdown on how to use home equity to build a cash flowing rentals this year and beyond, to build a zero tax snowball, you want to click on this video next, where I break down everything for you. Trust me, you're going to find a value there. I call it the 5 ways to use home equity to build a cash flowing rentals. So I will see you in the video. Peace.